Greetings all, Benny Reese West. Just going to take a look at the rate market and TLT, and I think rather than what's gone on this week, it's going to be a lot about what happens at the start of next week, because right at the death, this is what happened. Moody's came out and changed the outlook on US sovereign rating to negative, but did affirm AAA credit rating. Now that it should have an impact. So just looking, and I've taken straight from this Forex Live tweet, just looking at what Moody's have said. Fitch and S&P have already downgraded, and now Moody's has taken a step in that direction. Credit ratings agency maintained the USA's top AAA rating, but changed its outlook to negative. Downside risks of the US fiscal strengths have increased and may no longer be fully offset by the sovereign unique credit strengths. Okay, because obviously the US is an exception to most rules in terms of the sovereignty of its debt. It expects the US fiscal deficits will remain very large, which we've talked about, significantly weakening debt affordability. Sees US debt affordability to decline further, steadily and significantly to very weak levels versus other highly rated sovereigns. Political polarization in Congress raises risks successive governments not able to reach consensus on plan to show decline in debt affordability, which it's also talked about, but the US can carry a higher debt burden than other countries. The current US funding package goes until November 17, which is next Friday, and this is their words, not mine. I strongly suspect that that will underscore some of Moody's concerns. So obviously what happens next Friday as well is going to be important next weekend. But let's just think about and digest what this means for us right here and now. So just looking at TLT on the daily, and after our run we did have a little bit of consolidating chop in here, but you can see here we had a bad leg down on Thursday because there was a 30-year auction that wasn't particularly well received. So that is still showing a lack of demand for US 30-year bonds. And even though the quarterly refunding announcement lessened the supply, they still don't want them very much, not at that longer end. And I think that Moody's news, I wouldn't call it like a smoking gun trigger, but it's it's not helpful for the price in the short term, definitely. I would suspect that next week you're going to see TLT under some pressure again, because it should really pressure bond prices. It's just more negative news for the price, I'll just put it that way. So looking at this, day 16 of the current run has been the high. That would feed into a left translated cycle if we're going to fail below this point. And remember, we talked about this potentially being an ICL and this was a candidate. Well, as I was saying, it still only remains a candidate. There's no absolute proof that this is the low. You won't know for quite some time that this has been the low. But I just think that, I think this gap will probably almost certainly get filled in. And I just think that but that news is definitely going to put TLT on the back foot initially early next week. So, how far will it fall? Well, we don't know, of course. But, I would suspect that at the minimum, it's going to come down and retest that, fill this gap in and retest that. And yes, there is the possibility that it could fall further and this gets undone a bit. We've got to go back and have a rethink, and the bottom is not actually in. And that's why I keep saying that this is only a candidate. It's even though it's a good candidate, we don't have it there yet. It's just not showing enough yet. And that is why I keep coming back to these Ichimoku clouds for timing, because I'm not convinced that the low is in until we get on the other side of the cloud, and we're nowhere near that yet. Okay, there's still a lot of water to go under the bridge before we get there. Okay, so just even though this looks like a good start, I said last week this was a good start, and it is. I mean, you can just see we're running into the daily cloud there. It is a good start, but it's even on a daily, we've got to get on the other side of this cloud yet before we can even think about declaring this the low. All we got, like I said, all we have at this stage is a candidate. a good candidate, but it's a candidate. Okay, it's not. I'm not sticking a flag in the ground and saying that is the bottom. There's not enough evidence to support it yet. And so just whizzing back here to the 10-year note futures, and I think last week we might have been, I think last week we were around about here, and I was talking about the pullback, which we got, and then we've retested this area, but now we've failed. So we did hold up here. This was sort of like more the Powell press conference that shut the effing door. What a ledge. But, you know, there's a little bit of interesting sort of tradecraft going on here, because what do we got here? Well, until Moody's came out right at the death and dropped that news, what we had here is the market coming right back to touch the 50 and respecting away from it, but we never cleared this zone. And then when you go back the other way, if you look at this peak down to this low, we got right back to the 50 on this side. But now with that Moody's news, we failed. So we've got a bit of a failed swing going on here now. And we've gone down, we've come up 50, and now we've just broken through these lows into the death. So, you know, this area will be the first point of call. But, you know, I'm wondering now if we come back down and test as low as that, potentially even lower. The 10-year part of the curve isn't as prevalent to TLT, but look, it all feeds in, and this is just now, you know, it's swinging down. We had a really good upswing coming through here, but we're swinging down again. Now, all's not lost. We were talking last week about the RSI on the daily getting through 40, which now we've done. We've come down here into the oversold zone. So, you know, now I would sort of be thinking, okay, well, now I want to see, can we get back to 60, and how does the market react to the 60 area in the RSI? You know, we've got, you can see here where the yields have struggled to go any higher than about 4.65 through the week. But I am expecting that we are going to test up a little bit higher now. So that does open up the possibility that this isn't the top of wave 5, that we've got another kick in us yet. Okay, and that's still a big if this is even right. It could be wrong. But certainly that Moody's news is going to test the resolve of anyone who's got the view that the top of the rates is in. Like at the moment, I'm sticking to that. Until this breaks, I'm sticking to this, because it's still telling me enough that, yeah, that, you know, this is still a good candidate. But, you know, I'll change my view. I mean, like I said, there's definitely a possibility now that we come up and break this, and that we get back through 5%, maybe even higher. That definitely can't be ruled out. And as I said, that Moody's news coupled with the not as good 30-year auction is going to put, it feels like it'll put a bit of a floor under rates, and we can just see now, you know, and that's reflected in the 10-year note price, that we've just got this little range. But like I said, I'm expecting we're going to get on the other side of this early next week. I mean, how we go into later next week, I don't know, but early next week, I definitely expect a move up there, you know. So yeah, geez, I mean, to get back to sort of here, maybe test into the bottom of this 4.82. I don't think that's anywhere near outside the realms of possibility. That's definitely looks likely to me. 4.8. I think that at some stage, and likely early next week, you're gonna see that tested. That's how I would think at this stage. So just to finish up, I mean, nothing in a market is a slam dunk, and we've talked about this remaining the candidate. And we have sort of broken out of this trend channel a little bit, not conclusively, but like I said, I just think that we're going to come back down a little bit to start off next week. Whether or not we take this out, only time will tell. But for all the reasons I've already mentioned, you can't declare victory on this being the bottom until there's got to have to be a fair bit more water under the bridge, and that Moody's news is definitely not helpful for the price of TLT, at least in the short term. So let's just see if we come down and fill this in, and then just test into this structure. That will be the first point of call to see how the market's going to react to a move low. If we just crap straight through this quickly, then this becomes under serious threat. I would have thought, that's how I see it. I think Monday is going to be a crucial day. Let's just say it like that. We just don't know how the market's going to take this news, but you would expect that yields are going to rise, prices are going to fall, and we are going to test the resolve of any fresh longs. So look, I'll just leave it there. I don't think there's much more to add because I think the picture could look significantly different this time next week. So thanks for watching. Don't forget to hit like and subscribe, and we'll see you next week. Bye for now.